Hello and welcome, dear listeners, to our commodity podcast, your trusted source for latest updates and insightful analysis of the ever evolving world of commodities. I'm your host, Ravindra Rao, representing the Kotak Securities Commodity Research Desk. In today's episode, we are set to explore into the significant events and emerging trends that are poised to shape the path of commodity futures market for the week. Market sentiment has taken a cautious turn, driven by more guarded Federal Reserve and notable economic slowdown in China. The minutes from the Federal Reserve July meeting revealed concerns about inflation and potential need for further policy tightening. Positive economic indicators have fueled expectations that Federal Reserve may maintain elevated interest rates for an extended period. The FOMC meeting minutes have bolstered the US dollar strength. Additionally, Fitch Ratings has issued warnings of possible downgrades for major US banks and is re-evaluating China's sovereign credit rating, which has remained at A plus since 2007. These factors have contributed to the continuous ascent of US Treasury yields and the dollar index, both of which have seen 5 consecutive weeks of gains. US 10-year Treasury yields have inched closer to levels not witnessed since October 2022 and approaching the 15-year peak reached during the same period. The robust US dollar coupled with soaring US 10-year Treasury yields has pushed COMEX Gold to its lowest point since early June. Investment interest in gold has waned as rising yields increase the opportunity cost of holding non-yielding gold, leading to reduced investment activity. Notably, SPDR gold holdings have fallen below 900 tons for the first time since January 2020. It's important to highlight that the steeper increase in long-term yield curve rates compared to short-term rates primarily reflects a stronger economy rather than expectations of further rate hikes. On the price action front, dollar index is trading close to a trendline resistance near 103.57, 103.60. So until that holds on a closing basis, it might consolidate. However, on the lower side, support is pegged near 103, and below that, strong support is near 102.50. So until 103.60 holds on a closing basis, we might see some kind of consolidation happening, which is happening since last few sessions. In case of gold, COMEX Gold is trading close to the support of 1908, which is the 200-day moving average support. And if that holds, some short covering is possible for the week. In case of silver, price has taken a good support near $22.10, which was the 200-day moving average support, uh, which we had mentioned even in our last episode. Price has made a bullish engulf pattern last week, and the confirmation will come above 23.10. If that happens, we might see silver prices moving higher towards 23.50 in the week. Coming to crude oil 7 week winning streak came to an end, and base metals extended losses for the second consecutive week. This can be attributed to a deteriorating property market and sluggish consumer spending in China, along with the hawkish Federal Reserve stance affecting demand. Earlier today, the People's Bank of China lowered its 1 year loan prime rate by 10 basis points to a record low of 3.45%, following an unexpected reduction in the medium term policy rate the previous week, while keeping the 5 year rate, a key mortgage reference, steady at 4.2%. This move came as policymakers grapple with the delicate task of balancing economic support. Consequently, NYMEX oil has risen today above 81 per barrel, marking its third consecutive session of gains, driven by optimism that Chinese authorities would introduce additional policy measures to stimulate economic growth. On the technical front, NYMEX crude oil encountered strong resistance near $85 per barrel, which we had mentioned in our last episode. Excuse me, and subsequently corrected down to the support level of $79 per barrel. If the $79 per barrel support holds, bullish momentum may prevail. However, should this support level be breached, the price could potentially decline further, reaching as low as $77 per barrel. In case of base metals, copper has formed a good bullish engulfing pattern on the MCX 726, a close above 726 would be the confirmation, and if that happens, we might see prices moving higher, which can extend up till the 200-day moving average of 737. In case of zinc, in neck candlestick formation has been formed, and the support of which is close to 207.7. If that holds, we might see some kind of a bounce back in zinc prices, which might extend till 214, followed by 215.75. Looking ahead to this week, all eyes will be on flash manufacturing PMI figures from Western economies and the Jackson Hole Economic Symposium. The Jackson Hole Economic Symposium is a significant annual event hosted by Federal Reserve Bank of Kansas City, which brings together central bank leaders from around the world to discuss global economic matters. Comments made by the central bank leaders can significantly impact global markets. Federal Reserve Chair Jerome Powell is scheduled to address the economic outlook on August 25th, and the market participants will closely scrutinize the speech for insights into the monetary policy outlook, especially in light of the resilience of US economy and prevailing disinflationary trends. We trust that this commodities podcast has furnished you with valuable insights and information. As always, we encourage you to stay informed and stay well.